Hey there, welcome back to the channel. So, you've got an S-Corp, and you're wondering how to cash out correctly from your S-Corp distribution without running into any nasty tax problems. You know, avoiding that dreaded tax time headache that we all fear. Well, stick around because today I'm going to walk you through everything you need to know about taking distributions from your S-Corp, and I'll make sure you're doing it the right way. Plus, I'll throw in a little bit of humor because, hey, taxes don't have to be boring, right? So hit that like button, make sure you subscribe for more tips, and don't forget to share this video with your friends because we all know someone who could use some S-Corp distribution wisdom. Let's dive in. Before we get to the good stuff, let's just make sure we're all on the same page. What exactly is an S-Corp? I mean, it sounds like an elite secret society, but it's actually just a type of business structure. Well, it's like the Swiss Army knife of business entities. An S-Corp allows you to avoid double taxation, so you get all the perks of a corporation, but without the IRS doubling up on you like a bad karaoke duet. Basically, profits from your S-Corp flow through to your personal tax return, which means you don't get taxed at both the corporate and personal levels. That's the sweet spot of tax savings we're all aiming for, right? But, and here's the kicker, as an S-Corp owner, you can also take distributions from your business. However, how and when you take those distributions can make a big difference in your tax situation. Let's talk about S-Corp distributions. What exactly are they? Well, S-Corp distributions are basically the way you take money out of your business. It's not a paycheck, not a loan, just your share of the profits. Here's how it works. When your S-Corp makes a profit, the money doesn't get taxed at the corporate level, but it's passed down to you as the owner. That means it flows to your personal income tax return, and you'll only pay taxes on your share of the company's profits. Now, don't confuse this with salary payments. If you're an active S-Corp owner, you must pay yourself a reasonable salary for the work you do. But on top of that, you can also take a distribution from the business. These are the profit withdrawals from your S-Corp. Alright, here comes the juicy part, how to cash out correctly. This is where things can get a little tricky, but don't worry, I've got you covered. Let's break it down into steps. If you're an active shareholder employee, the IRS requires you to take a reasonable salary for the work you're doing. Think of it like your paycheck. If you're working full-time, you can't just take $10 a month from the S-Corp and call it a salary. You need to pay yourself something that's in line with what others in your industry would earn for similar work. Sorry, no $1 salary like Tony Stark in the movies. The IRS is watching. Once you've paid yourself a reasonable salary, you can then take distributions from the business. These are a portion of the company's profits. The key here is to only take distributions for the amount that's left after your salary has been paid and after the company's taxes and expenses. Think of this as taking the leftovers after a good meal. You eat your main course, salary, and then you get to enjoy a little dessert, distribution. Here's where the IRS can get a little cranky. If you take too much money in distributions and not enough in salary, they may come after you for underpayment of payroll taxes. This is a big red flag, so make sure you're balancing those distributions with your salary. Imagine it like trying to take dessert before you finish your main course. You can do it, but don't be surprised if the IRS comes knocking on your door with a "you're doing it wrong" lecture. Make sure you're keeping accurate records of all distributions and salary payments. If the IRS ever questions your S-Corp tax filings, having this documentation will save you a lot of stress and potential penalties. Now let's talk about the common mistakes people make when it comes to S-Corp distributions. These are the oops moments you want to avoid. Like I said earlier, this is a big one. It's like playing a game of tax chicken. You think you're getting away with it, but the IRS is going to smash that game board if you're not careful. Underpaying yourself, especially if you're actively working in the business, can result in penalties. You can't just take all the profits in distributions and leave yourself with a shrug as a salary. Remember, you've got to account for payroll taxes on your salary. You're responsible for withholding Social Security, Medicare, and other taxes just like any other employee. Forgetting this can lead to big penalties. Alright, so now we know the mistakes to avoid. Let's focus on how to do it the right way so we can all enjoy our well-deserved profit without any IRS drama. Let's talk about the consequences for a second. If you misclassify distributions or salary, you're looking at some serious tax problems. The IRS might reclassify those distributions as salary and hit you with back payroll taxes. Let's not even get into the penalties and interest that can pile up on those unpaid taxes. The IRS doesn't mess around when it comes to misclassifying distributions, but if you do it right, pay yourself a reasonable salary and take appropriate distributions, you're golden. Keep the IRS at bay and your S-Corp will be smooth sailing. So there you have it. how to cash out correctly from your S-Corp distributions. It's all about balance. Pay yourself a reasonable salary, take distributions in a smart way, and always keep your records clean. If you've learned something new today, or you know someone who needs to hear this, make sure you hit that share button, like, and subscribe for more helpful tips. Because trust me, everyone could use a little bit of S-Corp wisdom. And remember, if you're ever in doubt, don't hesitate to talk to a professional accountant. They can make sure you're on the right track, so you can enjoy your distribution without worrying about getting caught by the IRS. Until next time, folks, keep your taxes under control, your distributions balanced, and your business thriving. Catch you later.